Hi guys, welcome back. So LKCO had finished the offering today, and also I have got connected with the management and talked about the offering. So I'll give you the response they gave me, and also I would give my interpretation on it. Today it was a good day for the market in general for all the index. A lot of people were worried that the tapering talk would drive it down further. So on Monday, a lot of people were selling out of fear when the fear and greed index were at extremely fear level. And at that time, I said I thought the tapering news was already being priced in for the upcoming FOMC meeting. And today it happened, and they said they would give out a plan for it later, which is kind of expected by the market already. So I think a lot of the fall had already happened. So today we have saw some buy the news action. Right now the S&P 500 had a rebound to touch this blue trend line I drew before, and it was always kind of like my safety line. Because if we zoom out more, you can see that after the crash of COVID, we have been growing with this blue trend line. It was every time the last back test out of all the fearful events. It happened in the past 1.5 years. Like 1, 2, 3, 4. Every time it was extreme back test driven by extreme event. And we can see every time it got back up. So this is kind of my last safety trend. And it really dropped quite hard on Monday. Right now we have rebound and reached to this point and got rejected so far. So let's see if we can successfully get back above that. So then the uptrend for S&P 500 is not entirely broken. And out of all the index, what grew the best today was still Russell 2000. I know I've said it enough times, but I still think the market will rotate to medium to small caps more, and it would result in the Russell 2000 index. Yesterday, I said we broke the consolidation range for 2 days in the past, and today we had successfully stayed back above. So that is a good sign for me. So let's see if it can continue in this range, gain momentum, and break out again. Regardlessly, there are quite some small caps starting to give unusual movement, growing despite of the overall market sentiment. Because I really think the market stock price breadth is low because the bigger institutions, the smart money, they have had this tapering plan prepared. And that is why they were moving their money to mainly focus on the mega caps, the FANG stocks or the big blue chips. And maybe the moment all the bad news is out, the big dogs would be moving some of the capital back to the medium and small caps, which have been oversold in general, because they would be willing to take bigger risk when tapering is actually confirmed. This is why we are already starting to see more small caps making unusual movement. Like for example, SoFi, ticker symbol SOFI. I think this is definitely worth watching out for. Now you can take a look at the stocks you are holding. If in the past couple of days, the extreme fear sentiment of the market did not drive the share price to make a new low, chances are it might have a good chance to make a good breakout and just waiting for the momentum. You can see that for SoFi, even on Monday, it had a big dip but did not break the support from the previous low. And also, today it had given a good gap up above the biggest resistance from the biggest selling volume. So definitely worth it to watch out for, and watch out for any dips for good buying opportunity. And also EH, the big dip on Monday, and yet still stay above the support. It didn't make a lower low, and I'm eagerly waiting for it to make a higher highs, beating the one last time, to be above 30, so we can be more confirming the reversal trend. And for now, I think it's worth it to watch out for. And speaking of EH, there is an event worth mentioning. It is the China's biggest air show called the China International Aviation and Aerospace Exhibition in Zhuhai. That is coming up next week from September 28. So I think there is a good chance that EH would be there as one of the exhibitors. This is where the companies can showcase their technology to China, to the world, and also look for more cooperations, more media attention, and investors as well. So I think if this goes well, it might be a good opportunity for EH, something worth for us EH investors to keep in mind. Another one showing strong momentum is BEST, ticker symbol BEST. Even the day on Monday, it was still growing a little bit and continue for the next 2 days. I made a video 2 weeks ago about the logistics sector finally waking up, so I think it would be a sector rotation. Again, the dip doesn't make new lows and the high is passing the previous high, making a uptrend for now. Another example, Miniso, ticker symbol MNSO. This is the stock that I opened a position recently because I saw that the Hillhouse Capital continue adding on this and increase their position by 16% last quarter. So I bought in a little bit to give them support, to show belief in them. So far, it's not doing that bad. I guess I'm already happy with it not making lower lows, and see if this time we can pass the previous high of 14. On one side, I see Hillhouse Capital keep adding it. On the other side, I also make video about Miniso before I speculate with inflation. A lot of consumers would be interested into lower cost, affordable design home items. That is cool and trendy among the youth. And they also happen to be getting more popular in other countries outside of China. So that's why I opened a position. Another one is Niu, ticker symbol NIU. I have started to talk about NIU since August when I said these stocks might have bottom. And now that we know it's because ARK Invest had been buying heavily for the past 2 weeks. They usually move with the EV sector because it's electric scooter, but not 100% correlation. What's good about it is that it had made scooter looking young and trendy for the young people, and that it's the first brand to do that in history. Before, everyone thought it would be like cheap and ugly and old-fashioned, but they have successfully changed its image. And they are doing well with export as well. So new energy and brand export both align with the government's strategy, and I can see why ARK Invest has been buying it. Why I did not buy it is because I was mad at myself for watching it grow last year from 6 to 50 all the way, and I didn't do anything because I knew this brand since back in 2014, 2015, when I was doing branding for other electric vehicle clients. And at that time, I thought they had a good branding, good strategy, so I could not believe that I missed this one. And when you miss it this much, it's usually hard to take the step to open the position. And the reason dip obviously was driven by the whole market, and it's because of the CFO's resignation. And usually it's never a good sign to see the CFO leaving, because the smart money usually associate this with some kind of improper actions in the financial report. But it's really not a must. It doesn't have to be this way, because it says the CFO would continue working for them as a consultant for 3 months. But again, the dip did not make a new low, so that is a good sign. But to be more safe, it's better to wait for it to close this gap created on Monday. Now, if the share price make lower low this time, does that mean it's not investable? It would keep dipping. Not necessary. What you can look at is the MACD divergence. Take an example of HUYA. I haven't mentioned this for a while, and I've got requests for this. It had made lower low, but the MACD did not make lower low. So there is still hope. But if you want to buy in now, it is taking a chance, taking a risk. So it's better to put a stop loss at the lowest price on Monday, around 8.5. In case it drops below that, it might make lower low. The star of today, I would have to give it to Wimi, ticker symbol WIMI. It is one of my top 10 positions. I am back holding this. And today's movement, I want to say again another finally. Now, it had grown near 20% today, but the thing is, it had dropped from the highest of 45% of growth and closed with 20%. So from the look of it, it looks like a very big bull trap. I hope no one FOMO in the middle of the day and got caught at the highest point. But still, look at the volume. This is the highest volume for this year, more than the whole hype cycle in February. Right after the big run-up in August, because of the news that Weibo, which is invested by Alibaba, invested in Wimi. And I believe the share price they bought was around 7 to 8. So no wonder they had such big volume on that day. And right now we have another spike of volume again. So it's pretty nice to see after being quiet for so long. Even the news with working for Toyota on this day had much less volume compared to today. So I would definitely think it's unusual. And the fact that it can still manage to close above 4.2, which have been a support and resistance for so long. It is important to notice the green trend line, which is the 60 MA. Since it broke this trend line on March 23rd, we have never been able to get back on, even though we have backtested that a few times in June, and again 2 weeks ago, we still never stay above that. Today we got above and we closed below. So let's see for the next following few days if we can get back above that. For the first time in 6 months. Now 4.2 needs to hold, and at most it cannot drop below 4. Otherwise it's quite a big bull trap. So it is worth watching out for. What drove it up today was the news of the earning reports. They have increased revenue by 200%, so 3x from last year. Profit increased 189%. For a small cap like Wimi, and in an industry so early, it is unusual to be making profit. I hope it adds more credibility to Wimi because so many people said it's a scam. Now today LKCO have closed the share offering. So the good sign is that in the end we close at 1.26, slightly above the asking price of 1.2. So that means despite the offering, the demand right now is stronger than the supply. So we managed to close above the institution's buy-in price. So I have connected with the management team and got the official response. And it is that the offer came right after we did the interview on Friday. And that is why the CEO didn't share anything about that on Thursday. And that is why I also had a big shock on Monday. So it was the offer from a certain institution that is not willing to be disclosed. And they have reached out to Luoquan instead of Luoquan reaching out for the investor. And this is why it came as a sudden, because it wasn't planned beforehand. And my own interpretation is that it was a rush decision, but a good offer at a terrible time. Why do I say that? Because on the one side, they think the share price is much lower than the February one, which was 2.08, as they have completely acquired Imago, so the company's fundamentals should have gotten a lot better than before. So technically, the share price should be higher than before. But on the other side, the company is at the fast-growing stage and they constantly need cash to grow. I think they probably have set some kind of plan on fundraising for the year, and we might be approaching to near the time period, maybe. But right now, with the political storm, especially after what happened with Didi in July, the situation for Chinese stocks is very different than a few months ago. So that's why I said it's a good offer, but at a terrible time. So there are two sides to look at this. On one side, maybe the institution was pretty generous. They really genuinely want to help the company to grow and offer them cash, even though the Chinese stock situation is so bad, the sentiment is so negative. So it shows that they still believe in the growth story of China and the sector and Luoquan as a company. But on the other side, they are also very smart to do this offer while the storm is being so bad, so then they can get the share price at a much cheaper price to kind of take advantage of this fall from the whole sector. So there are two sides to look at the story and the investor behind. So if I were the management team, that's how I would consider it. Maybe there is 60 to 70% of chances that the Chinese stock storm would be at the worst moment. And after that, the whole sector would rebound and more hope would start to kick in. But there is at the same time 30 to 40% of chances that there might be more bad news coming in. So the sectors have not bottomed yet. For scenario 1, of course, you want to wait for better chance, better timing, better offer. But what if it turns out to be the other possibility? Then if things really get worse, you can't completely have no preparation. And even though you're not super low on cash position right now, you still have to prepare for more of the rainy days, right? Because remember what happened to Niu at the beginning of last year. What you can learn is that it's absolutely near impossible to raise funds when the company is at the very desperate position. You cannot negotiate. You don't have a position of strength because everyone knows that you are running out of cash soon and you are gonna go bankrupt anytime. So who would give any offer, any investment at that moment? So for this scenario, to prepare for this, I guess it's not a bad idea to raise a smaller amount of capital so then you're not diluting a lot of the shares but still have enough reserve or backup for more of the rainy day in case the scenarios might happen. So this is my own interpretation and obviously something the management team won't share to the public. So this is 100% my own speculation, okay? Now that's it for today. If you have enjoyed this video, please give me a big like and write me a great comment and I'll see you tomorrow. That's it guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.